Hi everybody, Eddie here. I'm going to do a market update for this week. So we have a really on the S&P 500. So we have this really good wave up here. It hit that resistance at that 4,200, and now it's starting to pull back. We did have a bull flag up here, and it actually broke down, but it's nothing to worry about. It's still above the 50% percentile area, and still above the megaphone top, above 200-day moving average. So everything still look fairly bullish at the moment, even though that the trend is temporary down. So on Friday we did make a reversal hammer on the bounce of the 200-day moving average. As you can see right here, it came pretty close to touching it, and then it bounced hard off of it. Right. So next week's going to be the big tell. So next week we either going to break down. If it breaks down and goes back into the megaphone, it could get pretty ugly because we come back and retest these levels down here, and then we'll technically be back into the. It bounces if we break above the hammer next week and we come back up. One of the lowest you want to see it to get past is about that 4050, 4060 area, which is there right here. If we can go past that area, we're back into the bull trend. It is far away from the 8 EMA right now, so a bounce towards the EMA is expected for next week. And if it gets rejected right here, it's likely it's going to get rejected, and then we go lower, or it's going to bounce, and then we're just going to continue higher for the next wave up. Right. So if you measure the move from the low to the high, this is only the it bounced almost exactly at the golden zone on the Fibonacci ruler. So it's right between the 0.618 and the 0.5 area. So this is usually the support zone in an uptrend during the consolidation, right? So we're still in that golden zone, right? So next week we need some follow through. All we have to do is get like a reverse Monday. That would create this somewhat of like a island bottom. In a scenario like this, where you get a big drop and then a doji, and then you get a big reversal hammer. That usually brings the market back up, right? That's a reversal pattern. So that's what I'm looking for somewhere along here as well. I'm looking for somewhat of an engulfing green bar on Monday to at least go test the 8-day moving average, and then see if there's some follow through and breakthrough back through it. If you can break back through it, then it's going to come all the way back up and retest this area once again, right? There's quite a few gaps up here that still have not been filled, so it is very likely that we will come back up and fill all those gaps. Right. So there's a gap right here. There's a gap right here. There's a gap right here. There's a bunch of gaps, right? And the big gap that needs to be filled is up here. So on the way back up, it needs to fill all of these gaps, and then it's going to decide what it's going to do next, right? So yeah, for right now, it's everything still look fine, even though it doesn't look like it. But it's hitting into that support zone, is bouncing off the support zone. So that's the first sign of some bulls that are still around here. So all we're looking for right now is just follow through to go for the continuation back up. Right. Let's take a look at the Qs. So the Qs are still looking good. We're still far away from the megaphone. Well, not the megaphone, but like this downturn right here, we're still pretty far away from it. We're still above the 200, above the 50, above 100. So everything still look good. So same scenario right here, looking for a bounce, looking for some support. There was quite a bit of volume coming through right there on Friday to hold this 200-day moving average. So if we do get a follow through there, right? Some of the mid caps and small caps, they're still doing fine as well. You can see we're still making higher highs. So far, still a higher low. So as long as he holds above like this area right here, he's going to continue higher, right? This is the main support right here, and we bounce pretty good off this level. And you can see on the moving averages how it goes up and start curving and flatten out right here. This is usually what happens during the start of a bull cycle. If it is a bull cycle, this would be the bottom, and then we're going to make higher highs, higher lows, and continue going higher, right? So the key thing here is really come back to this low right here, that's no longer valid. Then the trade is no longer valid. And then it requires to go all the way back up, like break back above here in order for the trend to continue, right? So just watch this, watch these movements. Make sure there's a higher low. If there's a higher low, then it's definitely going to go higher, right? So that's how bottoms are usually formed, is when the moving average get flattened out, and then you start making higher lows. Same with the mid caps right here. We're still making higher highs, higher lows. It's testing the breakout area, which is right here. It broken out, bounce off there, nice green candle. All you need is some follow through, and then we're just going to start trending back up higher, right? So mid caps looks to be the strongest out of all the indexes. So I was saying before, this would be like the area you want to start looking for stocks to trade, because it's performing much better than the other indexes at the moment. Let's take a look at the VIX. So the VIX came up and tested this region right here around that 24 area. It failed so far. It's just coming back down. So if you actually start coming back below 20, it will be likely that the index will continue to go higher, right? If this actually shoots back above 25, then the index might actually come back down sharply at the low it's at right now, right? So just keep a watch. I did set my alerts around that 26 area. That's the area usually triggers a sell off. So if it actually breaks through that 26 and they get the alert, that means that the market's actually going to start selling off, and then it's time to actually start shorting stuff again. So, just keep close watch on that. Everything's still looking fine at the moment. Still very bullish. There's like some signs of weakness, but nothing serious yet until we break through some of those key levels right there. So for the SPX, the key level is 39.20. Right, if it breaks through 39.20 and then shortly after that 3900, if it's below 3900, we're back in the megaphone, right? So that is the key zone. So 3950 was a big zone on Friday. That was the zone that I actually went pretty heavy on and bought at. I saw a lot of spreads. I bought some lottos, 3x. These key levels, they make a huge difference when you understand how to trade levels, right? So 3950 was a big, huge option wall where both call and put interest were extremely high around that area, and it's at a key technical level as well. So when you have a few things combined in one place, usually what happens is that tends to be a very strong support, and then you look for the bounce off the strong supports, right? That's usually where the bulls show up. So the bulls did show up on Friday, and that was a really good sign. So now, like I said, Monday is the follow through day. Apple had this really huge rally up. It didn't do much of a pullback, so it's still a very, very strong trend. Right, markets move in waves, so they go up, they need to come back down as well, right? So you want to see the pullback to be above the 50 percentile on the first move. So when it's bouncing off above the 50 percentile area, that's the area where you want to start going back in for the next leg up, right? For strong uptrends, it needs to stay above the 50% line on the first wave up, right? Usually the first wave up, it comes back, retest, give back half, and then just continues higher. So that's what you're looking for with Apple as well. So if it does come back to around that 50 percentile area, that's around the 50-day moving average right there. If it bounces, it can also bounce off this 0.382 area, which it looks like it's doing that right now. So there's still some room for it to go if it really wants to come down, but so far so good. It's still above the this downtrend right here, still above that channel. So it's not surprised to actually come back, retest the channel, hold, and then go higher, right? AMD, same thing, still in an uptrend, or like a mini uptrend. Technically, isn't like if this is a defined downtrend. We've broken out the downtrend now, so if you all the way down. So we've broken out of this area, right? We're above the, well, slightly below 200 now, but we're around this area, right? All the moving averages are flattened out. Usually, when you look for bottoms and reversals, like big reversals on the daily, you're looking for moving averages get flattened out, right? That's the first sign that potentially this is the bottom, right? And then what you're looking for is follow through. So right now we're looking for follow through. So it had made a nice move up. and it's pulling back to around that 0.382. We're looking around that that 50 percentile at most, that 0.618 area at most, and then continuation, right? So at this area, if you're brave, it's a good buy zone, right? It's a good buy zone right here, so you can start going in small, and then if it bounces, you can go on a little bit heavier. You can add on to it as it start bouncing off these levels right here, right? Right? It's a small precision. That's why you go in small. And then as it start agreeing with you in the right direction, you then add. That's how you trade, right? So especially for swing trading. So this is the key area to look at. This is the area where you can start a precision once you start seeing somewhat of a bounce, right? You're looking for like engulfing green candle. You're looking for price action to go back above the moving averages, right? You're basically looking for a higher low right here. So if you get that higher low, it's time to go into the stock, time to add to it if you already have existing positions, set your stops, and then let it ride. Amazon, Amazon is a little bit weaker than all the other names, all the other big names. You had that big pop there on earnings, and it came all the way back down, right? And it's not stopping either. So it's right around that 0.618 area, which is the key support zone. So it really needs to hold right here and then continue higher. It needs to go back above. It's still trading below the 200-day moving average right here. So it's still got a lot of things to work through. It's not as strong as the other names. It is fairly weak. It's still within the downtrend, but it is consolidating right down here. So it's going to stay a little bit choppy down here, I think. And then once it finally breaks back above, let's say 120, which is breaking the high of this breakdown area right here, right? If it can break back above here, this is when you can start adding to it, right? So I do have a position on Amazon. I saw some puts that got assigned. So right now I am looking to either for it to come down to around 75 where I add my second leg, or for it to come back up above the 200 and then I'll add to it, right? One or the other, right? You never want to deploy like your full capital when it's consolidating, when it's correcting, when it's at the start of the move, right? You always start off in layers, especially for longer term swing trading, right? You always start off with layers. So if you're wrong initially, you're going to lose small. But if you're right, you're gonna make some money and you can add on to it, and then you can use the profits of your first leg as your stop loss. Then it's a break, risk-free trade, right? Because if it actually reverses back down, you already made some profits off the first leg, so you can use that as your stop loss, your cushion, right? And you can exit the trade without losing any money. But if it actually goes up, you're gonna make a lot more money because it's confirmation that you were right. And that's how you trade. Meta had that really nice earning pop. There's still a gap right here that needs to be filled. I'm looking for it to come back. I may not get it. It does seem to be hold quite well up here. Let's see, measure the start move. So it's around that 0.382 area. So the gap fills about 0.5%. So I would like to see it come down to around that 150 zone. If it comes down to 150, I think I need to grab a little bit of Meta. Um, and they're also copying Twitter's verify account scenario. So that feature, it's not going to cost them that much money, but it can generate quite a bit of revenue if it does work out, because it's basically a service on top of the resistance user base. So if people want to get verified, especially people that do business on Facebook, if all those people get verified, even 1% of all the population that uses Facebook get verified, that's extra billions of dollars in revenue per month, right? That can substantially increase their bottom line. So that is a pretty good feature to have for them if it works out. So keep a close eye on this. Look for that gap fill. Once it gap fills, I would grab some of it, even something small like that. If you think this will go higher within the next 2 years, buy like a 2-year leap. They're not that expensive compared to owning the stock. So, if you think it's going to go higher, buy a leap, hold it for the next 2 years and see what happens. Sometimes you can make like 10x your money really quickly. So, Google's still very weak. Ever since that their chat bot, their AI bot failed to answer that question, it just kind of dump and continue to dump, right? So, it's down at this buy zone now. So I sold a bunch of puts to grab some shares at different strike zones and different for March and for April. So if it bounces off here, I'm gonna collect the premium. If it doesn't, it start hovering around here or go any lower, I'm gonna grab my shares, right? So it's only my first leg getting into the stock, so it's perfectly fine. I am planning for it to come down to around 70 to go heavier. So if it does come down to 70, I'll buy way more. But at the moment, I'm just kind of scaling into the trade right from here because this is pretty well a support, first support zone. As you can see right here, there's quite a bit of demand around this area. So this is the area that you really want to start getting into it, right? And then if it comes down lower, all you have to do is average into it for longer term. I mean, this is one of the stocks that you can average down on. Well, not average down, I should say average into. Big difference. So if you plan, say, 500 shares of this, buy like 1 or 200 now, and then come down here like halfway, maybe add another 100, and then it comes down here, add another 100, and then on the way back up, then you can add a little bit more as well. So as long as you plan your trades and you get in at good support areas, you're pretty well getting your bang for your buck, right? So if you once you start to bottom, once you start to moving, you're going to make substantially a lot more money. That's how investing works, right? So that's how I do it for my longer term positions. For like if I am trading, it'll be completely different. If I am trading, I'm only trading momentum, not price projection, right? I'm basically going with momentum until momentum breaks. That's how I trade. But if I am investing, which I do separate my accounts, like I teach that in my first advanced course, I have a very aggressive account, I have an aggressive account, medium account, then I have a long term account where I just basically invest for the future and very slow growth, more for safety and for income and stuff like that. So it's almost like real estate, right? That's what people use for long-term investments. They buy a bunch of real estate. Well, I like to buy long-term stocks instead. So it's the same thing. And you have to diversify your portfolio a little bit. So I have a portfolio for the long term. I have a portfolio where I do like a wheel strategy when the market conditions are proper. I use that to generate pretty good returns. Like I'm seeking like around 50% return a year on that. And then I have my aggressive account where I'm swing trading a bunch of stocks, usually never all at once, but like different setups and I like to trade a lot of different stocks for some reason. I probably should concentrate more and go heavier, but I like to go more diversified. But I pick good setups. So it does tend to work out in that account. I'm looking for like around 100% or so a year. And then you have my super aggressive account. That's the account that I day trade. That's the account that I do very aggressive option strategies and stuff like that. And that account, in 2020, when the market conditions were right, I was making about 200 or 300% a month on that account. So that's how aggressive I was, right? And I don't really care if that account blows up either, because whenever I double my account, I withdraw the money out, and then I leave the original amount in there so that I'm constantly going aggressive, but I'm constantly taking profits out. So everybody, sorry about that. I had some microphone issues and I had to stop the video. So I'm just going to continue off here from Microsoft. So Microsoft is still pattern, right? So we see that we have that double bottom, we have the base form right here, and then we're just on the way back up. So right now, Microsoft is during the pullback period. So if you measure the move, we're still around the 50 percentile area. So this is the support zone right here. So Microsoft needs some follow through and bounce off here to continue higher. So if it does bounce off here, you're looking around this high right here as your target, right? So if you're in it, right, this is the area where you want to add once it breaks above this 257 area. If you're not in it, that's the area you want to get into it. And then you aim for first the high right here, and then you go for the high right here, right? So you go enter, take profits right here, and then you take the more profits over here. And then as long as they stay above the moving averages, you can stay into it. But once you start breaking, you can actually get out of the trade. Right. So that's how I would trade this setup right here. So I don't have any stock in Microsoft, and I did not sold any puts to get shares of Microsoft. I was looking for it to come down a little bit more, so we get a little bit better pricing, but it doesn't look like it's going to come down. So this is probably the chance for me to grab some shares if I really wanted some. So I'll probably be looking at this for next week to see if I will open a position or not on it. Stock I normally swing because they're not profitable, so it's not a company I really want to hold longer term. It's more of a trading stock, and the range is just not big enough for me to trade right now. It filled that gap and it's coming back down. It's going to retest like this 1 period moving average right here to see if it holds. It's still making higher highs, higher lows. So as long as it holds above right here, it's still fine. If it breaks below that, it's no longer valid. It's going to come all the way back down to like the low pivot channel, which you don't want. Other than that, there's really no setups right here. This move is still let's see, 0.618 area. So they're right at that support. If it goes any lower than that, it's no longer valid for the uptrend. For like the higher low of these waves, right? So it's going to start coming back down. It's going to be part of more of a big wave type of scenario. But like I wouldn't trade it unless they start bouncing off this level and then break back above that 335 area. Nvidia. Now this stock has just gone insane from the bottom. So Nvidia is a huge like a AI player, and AI stocks are hot lately, like really hot. So Nvidia is big part of that, and that's why it's been moving so much because Nvidia is a big retail stock as well. So there's huge retail following on Nvidia. So it tends to when it moves up, it tends to go up sharply, and when it comes down, it tends to come down sharply as well. So you can see right here we have that cup and handle. It broken out of that area. This was one of the stocks I hesitated to buy at the start, and I don't know why. At first, it was because they were banned from selling chips to China, but they worked around that now, so they can actually do sell to China now. So ever since that news has just been keep going up and up and up from there. So but the moves right here is very extended. We did have that huge gap up on earnings. So it's very extended right now. It's likely, um, I don't know. Like it's very extended, but I'm looking forward to fill that gap or maybe come back and retest this breakout area before we continue higher. Because right here, like it's hard for me to buy right here. Like the risk reward is not great because you're basically looking for around right here. But if it comes down, it's coming all the way back down to like either here or down to 50 period moving average, which is down here at 186, which is quite far away. So I am looking for a pullback, or even if it doesn't pull back, I would at least like to see a consolidation right here so that the moving averages can catch up to the price and then you get a better entry point. But right now, like if you're not in it, I wouldn't get into it. Even though you can continue higher. Let me just measure that move. Yeah, it's way extended. It passed the 100 percentile. It's going to aim for this 260 area. If it does continue higher, and then it's probably going to get a sharp reversal. So, be very careful when it get extended like that. Although, this is what happens with Nvidia, right? Big up moves, consolidate, and then bigger up moves. So, that could be the case. This does look like a cup and handle pattern as well. So you can see right here, nice rounding bottom. Then we're gonna go up here and then probably consolidate and then test the highs. So that's what I want to see is just consolidation around right here and let the moving averages catch up to the price, and then you get a much better movement like you did over here, right? So you went parabolic, came down, flop around that 50-day moving average for a while, and then it went for the big parabolic move. right? So that's what I kind of want to see over here. I want to see it to form somewhat of a consolidation triangle over here, like somewhat like kind of like this, right? Kind of like that, almost like a bull flag. So like back and forth, and then the big break, right? So that's the scenario I want to see with Nvidia, and then that will give me a better entry point because right now I missed the boat, and I probably won't go any higher. Won't go into it until we post back. So the only way I can play this space would be like with AMD right now. So okay, Tesla. So Tesla is not dropping, right? So Tesla's not dropping. It's forming a cup and handle type of pattern as well. Um, so you see right here, nice cup. Here's the handle, right? You want to see it stay above this area right here. Anywhere above here is fine. If you measure the move, the reason being that's around that 50 percentile area. So anywhere above this area is still very bullish. It is approaching the 200 period moving average right here. So what I want to see this volume, right? That's heavy buying. That's institutional buying, right? It can't be just all retailers. It has to be retailers and institution buying in this area in order to get that type of volume. The last time we got that type of volume was at the very beginning of this mega move right here, right? Because this is where everybody got into the stock. What was it doing right now? Same thing, right? So watch this. Watch it break above here. 240. If it breaks above 240, it's going to fly. Like it's going to fly. This is a heavy shorted stock as well. So whenever there's heavy short on the stock and there's huge buying, what happens is everybody gets short squeezed and you get a mega big move, right? The next big move can trigger this thing all the way up to $320 again. Like that's all it takes. It's just a short squeeze and then pop right up here, right? So this is a very important area because that's the area we broke down from. So it really needs to hold this area, right? It needs to hold this area and then break back above it. That's how you confirm that a stock is bottom, right? One is look for the volume. There's the volume. Two is it needs to get above the 200 period moving average, which is right there. And the three is it needs to break back above the area that I broken down from, right? So Tesla could either get like a big huge squeeze or it can come all the way back down. So one or the other. Because when things were coming down right over here, looked really grim. Thought it could hit around here, but it hit 100, which is already really good, right? Because that was one of the supply, one of the demand zones. But like I was waiting for it to come down here. I was hoping it came down here so I can back up truck on this thing, and I missed the boat already. So, anyway, if it stays around here for the next little while, I'm probably going to see if I can grab some shares. I could possibly sell some puts right around that 160 zone. Probably going to do that, and then just grab some shares cheap down here, and then if I can, if not, I can collect some pretty good income on it because Tesla is pretty high premium. So that would be one of the ways I play. If you're not in it, just sell some puts down here to grab some shares. Go small, don't go too big yet. And then if it breaks above the 200 and breaks above the 240 zone, that's really where you want to add, where you want to go long. And then hopefully you can get that ride up to around somewhere along that $320 area, right? So let's just measure this. Let's just pretend that you'll come back and retest here. So if you come back retest here, so yeah, you're looking at 283 and then 350 something. So it'll be somewhere up there. If it doesn't, it just stay around right here. Yeah, so you're looking at the target 100 percentile target. If you just stay around up here, is right around this upper part right here. So right around that 305 to 320 zone. So that is the target. So you can see right here all the set my alerts from before. So that would be a target zone. If it holds right here and just pops, that would be a target zone right there. If it does come down, then your target zone is lower, or around 280, which is at the low of this consolidation. That means that it's possible to get rejected at the low right here. If it does come down and then pop, right? So that would be your two scenarios there. Just keep a close eye on it and see how it goes. Anyways, that'll be it for this week. Make sure you like, subscribe, and click on that bell icon so you get the latest updates. I'll see you guys next week.